Hello and welcome back. My name is Josh, and I wanted to follow up on my last one. I previously did a primer on cryptocurrencies, if you haven't already seen that here. But now I want to go into more in depth into Bitcoin. Of all the cryptocurrencies, it's probably the one you've heard of. So I figured that's the one. Let's start, and we'll discuss that in a bit more detail. So what is Bitcoin? It is a cryptocurrency, and many people have described it as digital gold. I think that's an apt analogy in my mind. There are many other cryptocurrencies. Many of them have more use cases. Bitcoin to me is the original cryptocurrency and therefore also the most simple one. And so I think it makes a good comparison to gold. So what is gold? Gold is obviously, it can be used in electronics because it does collect electricity, jewelry for looks, but for the most part, when you think of gold, you think of gold bars in some or gold coins like from back in the day. And really, it was a store of value. What does that mean? People would trade gold coins or gold bars. Back in the day, actually, the dollar was based on the gold currency. So in other words, X dollars, you could convert those dollars for an equivalent number of gold. They couldn't print, the US government couldn't just print more dollars. They need to get more gold to say this dollar is backed by something of hard value, of real value, which is gold. So gold was a store of value. We said it had value. Why? Because it was rare. And so that was kind of the logic behind it. This is you might hear people say, why does Bitcoin have value? Oh, it doesn't. It just has value because we all believe in it. The same with gold. Why does gold have value? It has value because everyone thinks it has value. If we all agree something has value, it has value. So if you want, again, some things are inherently value. An apple has value in that it can nourish someone. But something like gold, again, does have limited commercial applications, but for the most part, people want it because they want it, and there's that demand for it. Um, so Bitcoin is digital gold, and I wanted to look at, there's a ETF here called Gold Trust. We can see here, this is the price of gold. So this is an ETF that basically tracks the price of gold. In the last uh, couple months, actually in the last 2 years, since the pandemic kind of started, um, actually let's go back. Gold typically goes up in in times where people are a little afraid, um, where they are afraid of inflation. It's an inflation hedge. That's why most people say you should have about 5% of your holdings in gold. So they have an inflation hedge because the logic is if they devalue the dollar, gold will go up in value. And you might say, what's devaluing the dollar? Basically, it's printing more money. And think of it this way: if you had $100 and one pizza, with 100 slices, each slice would be worth $1. If you then printed twice as much dollars, now you have $200, but still only 100 slices of pizza, and again, everyone wants to eat pizza because that's the only thing in the economy. The pizza slices are going to be worth twice as much because there's $200 now chasing those 100 slices of pizza, so now each slice is going to be worth two. So again, the that's inflation. It's when there's more dollars chasing the same number of goods, or the same number of dollars chasing fewer goods, or more dollars chasing fewer goods. So that leads to price increases. And that's why if you see, why are prices going up in the economy right now? It's because of inflation, because we've printed a lot of money. Let's actually go show the money printing. Here's money printing. This is M2, which is a measure of the monetary system. So we can see we're constantly printing money. This is the US, but it's slowly going up, slowly going up. And then I don't know if you can see here. This is COVID. Look at how quickly it goes up. Boop, way up. So this is a huge increase, and you can see the slope of this line. And actually, let's narrow this down just to give an even better view of how extreme this was. Here it took 3 years to go from 1300 to 1500, so an increase of 2000. We then increased more than 2000 in a couple months, and then since then we've increased another 3000. So, we're talking it took 3 years to get to. We increased twice, we printed twice as much money, increased the money supply by twice as much in a year and a half as we did in the last four, 3.5, 4 years. So we're probably printing money at 4 times the rate, maybe more. So again, this leads to a huge increase in the money supply, which is why you might have heard inflation is up. If we look at the last 5 years, you can see inflation hovered around 2%. And you can see lately it's up close to 6%. It's 5.5%. If we look back, inflation hasn't been this high in a very long time. Probably since, looks like the last time we had a little dip up here, but basically we're at nearing highs in the last 20, 30 years. So again, why? More money printing. So again, gold is often seen as a hedge against inflation, and yet in the last year and a half, when the pandemic hit, gold did go up quite a bit, but since then, it's actually gone down. It's down 10%. Now, why would that be despite inflation continuing to go up? And in fact, inflation was even higher lately. You can see here, it's gone up even more recently. In the beginning of the pandemic, it was still pretty low. So, why has gold seen, poor results recently? Well, I'm sure you can read gold outflows, gold back ETF holdings and flows. So this is the number of flows into or um, out of gold ETFs. Here, gold ETF outflows continue, but slow. So people have been taking money out of gold and into somewhere else. Why? Because I think people today don't really see gold as much as of a good inflation hedge. To me, the logic behind gold, if inflation gets terrible and the world economy crashes, that's what people, there's people called gold bugs. They're always nervous that bad things are going to happen, so they want gold. If you hold physical gold, I can kind of understand it. You bury it in the backyard, and in case the world ends, you have gold, and you can trade that for things in the apocalypse. Again, do I think that's realistic? No, but like I kind of understand it because you physically have it, so you could use it. If you have gold in an ETF, that means that someone's holding it for you, probably in Brussels, and you have a digital piece of paper, you have a digital slip that says, I own this much of the ETF that gives me this right to this much gold. If the world ends, you're not getting that gold. Like, there's no chance that you're gonna get on a plane, fly to Brussels, show your ETFs, and say, "Hey, I get this much gold." Like, that's not the case. So, I've never understood the logic behind owning digital gold. I had it for a number of years, just because that's what all portfolio managers kind of say. So I did it, and I've since sold out of all my gold because to me it doesn't really make much sense. Um, and I think one of the reasons is because people are replacing it with Bitcoin in their portfolio. Bitcoin is the new gold in my mind, because it is an inflation hedge. Again, there's a limited, like, why is something a good inflation hedge? Well, gold, unlike money where the government can just print more, gold, you can't just like print more. You can mine more, but it's slow and it takes time. So you can't increase the supply 30% in a day or a month or a year. It's probably increases, the supply probably increases 2 to 3% every year consistently. So if money supply goes up quicker, you think that, again, if money goes up quicker than gold, just like the amount of money that goes up more than the pizza increases, the price of gold should increase, just like the price of the pizza went from $1 to $2. So um, that's the logic behind why gold is a good inflation hedge. Well, Bitcoin also has a limited supply. There'll never be more than 22 million Bitcoin. Never, ever, ever. Um, and the supply of Bitcoin does increase, but it increases at a very slow rate. Again, that's a block reward every 10 minutes when they um, verify the transaction and add a new block. You add, they get a block reward, so they get rewarded with a little bit of Bitcoin. And that reward gets halved every couple years. So, in other words, the rate of increase of Bitcoin is going down. But to me, Bitcoin is the more realistic inflation hedge. Um, and you see that it has had a great year. It's up 300% since then. So again, I see Bitcoin as digital gold. I think it's a more realistic one, and I think people have been pulling their money out of gold and into Bitcoin. My generation doesn't want to touch gold; they want Bitcoin. So again, the thesis for Bitcoin is very similar. It's a store of value. It's somewhere where you can park your money, and it's safe. The government's not going to inflate it away. And if you need to make huge transactions, people previously used to literally ship gold to make a massive transaction purchase. I want $10 million or whatever, $100 million. It's actually more cost effective to do that rather than shipping bars of gold across the world, which costs tons of money. If you want to remittance, you want to, verify a transaction, it needs to cost for $10 million, $100 million, it'll cost you probably $100 worth of gas fees, which are the fees you pay. Maybe that's on Ethereum, but it's the fees you pay to make a transaction. For $100 to move $100 million worth of value, it's pretty cost effective. So again, I think it makes sense, especially for people. Another reason is, people say, oh, criminals want to use Bitcoin. It's probably true, but it's actually not the best because, again, it's an open ledger. Anyone can see the transactions on the Bitcoin network. So they might not know you're the one with that wallet. So it can be hidden in some ways, but everyone knows which wallet got the $100 million. So if I extorted someone and said, pay me in Bitcoin, I could see where that Bitcoin's going. I can see it went to this wallet. And if I can track that wallet to who's accessing it, I can actually find you. And there was a case recently, pipeline, what was it? Pipeline, Bitcoin, ransom. It was recovered. So USDC is 2.3 and Bitcoin paid. So someone hacked the Colonial Pipeline. They paid in Bitcoin, and the US actually was able to recover it because they were able to track those wallets. So again, there's a big thesis that Bitcoin's only used by criminals. I strongly don't believe that. It doesn't have a use case for criminals, yes, but there's actually other cryptocurrencies specifically designed to create anonymity. Bitcoin is not one of them. It's synonymous. You don't know. You can clearly track which ID it's going to, which wallet, but you don't know who that is. It could be anyone. So again, synonymous. It's it's going to XYZ23. That's the name of the wallet. But you don't know if that's Josh or if that's someone else. Obama, who owns that wallet. So again, I don't really see it as being a criminal reason, but I do think that there's a lot of value for as a store of value. If you live in a country where you're afraid the government might seize your money, you live in China and you're afraid of the government. If you put your money in Bitcoin, it's impossible for them to seize it. While if you had your money in cash or stocks, they're the government. They can do what they want. So a lot of people are using this as a way to protect their funds from inflation. So if you're in a country with high inflation like Venezuela, where the value of the dollar goes down at an extreme rate, then its value. That's one use case. Two, hiding it from unlawful governments. So again, if the government's trying to steal your possessions. Three, a big reason is remittances. If you're sending money, many people in third world countries, or you're not, I want to see third world countries. If you're sending money back to family in another part of the world, India, the Philippines, Mexico, you have to pay a company like Western Union to do that, and they take a huge fees. They take 10% fees to send that money and make sure it gets there okay. If you can use Bitcoin or cryptocurrency instead, that's another easy way of sending remittances with much lower fees. So these are three use cases of Bitcoin. And again, to me, I always try to say, like, what's driving the value of Bitcoin? It's the use cases. People want it for a reason. They want it as an inflation hedge. I think that's thesis is still intact. They want it to protect their money and store value, and they want it to because they don't trust their currency and they want to save on fees when sending money more easily. Again, digitally is a better way of sending money. So I think all three are great reasons to own Bitcoin or use cases for Bitcoin, which drives demand there. The real reason most people buy Bitcoin, and I'm sure this is me too, is because they think it's going to be worth more in the future. And it's an investment. They're betting it. But what's driving that value? Well, what's driving the value is that they think other people will also see that there's value in this. So if no one saw value in it, there wouldn't be. But because everyone does see value in it, it leads to demand, and that's increases the price. Again, there's only so many Bitcoins, so if more people want it, that will drive the price up. So I do believe that more people want Bitcoin in the future. I think it is a good store of value. I think it is a good inflation hedge. I do think there will be more use cases. So I personally, but it's tough to analyze what's the right price because unlike a stock where you can say, okay, the value of the stock is the discounted cash flow of of the money they make from the business. This is purely based on the demand. It will be based on the demand. If there's demand for this at 100,000, this is Canadian dollars, by the way, it will be worth 100,000. If there's demand for it at a million, there's only so many Bitcoin. So it depends on how many people want to buy how much Bitcoin. And that's really what determines the price. So it's very hard to kind of do. I've seen some great work by ARK Invest. I would strongly recommend reading a paper of theirs. Actually, I'll leave it in the comment section below. But it talks about they're trying to approximate the value of Bitcoin by looking at use cases. They say, what's the total market for remittances? What's the total market for gold? What's the total market for this? And they say, if they capture 5% of this market and 5% of this market and 5% of that market, what's the total market size? And then they try to use that to approximate what the price is. And I think, I believe they approximated about either $250,000 or $500,000 US per Bitcoin. So again, I think that was great work. I think in my thesis, I'm gonna buy on every dip. I also buy a little every week anyway, because again, I don't know what the price is gonna do. I've said it's gonna go up, it's gonna go down. You really don't know, but I'm a believer long term, so I'm gonna keep buying. And before I close, I'll close with a story on Bitcoin. So I actually first heard about Bitcoin way back in the day, even like I thought it was even earlier than this, but maybe it was 2013. And a friend of mine, we were sitting over beers and we were talking, and he told me about this idea, and I said, it seems silly to me. I was trading for dollars. He was big into it. I said, what makes Bitcoin special? Like, why couldn't I create another coin called Josh Coin? And what makes my coin any more valuable than yours? Like, they operate on the same, same technology. So I didn't believe in it. And then, there was the Mt. Gox thing. If you don't know, the first crypto exchange got hacked and people lost money and the price fell dramatically, like 90%. And, I thought, see, I was right. Then I don't think about it for 2 or 3 years. And then I hear about a couple years later, probably around here actually, 2016, and I heard it was up. And I thought, what? Like that thing was down 90%. How'd it get? Now it's up 10x. It's up way more than it was before. How'd that happen? So, I thought it was interesting, but I don't think I think I bought some maybe 2017. So early hype. And then I saw it go up a ton, and then it crashed again. It went down another 50%. Well, I held, and I said, well, I guess there's nothing to that again. Um, but obviously it went up again, up 2x, 3x again. So I've seen this thing go through multiple crashes. I've been wrong about it before, and I believe that every time I see a dip, I'm now buying because I really have seen that. I'm not saying you can't kill this thing. I think it could. You could kill this thing potentially, but this thing seems very resilient. There's not many asset classes that you have seen multiple 50+% drawdowns and are still worth 100x, 200x what they originally were. Now, I also think as we get larger, you're going to see more minor dips. I think the original dip was 90%, then it was 50% in 2017, the last one. This dip was probably close to 30%. Let's see, 45%. Even this one, let's see how much this one was. Also 50%. I think that as we get bigger, we're not going to see as big dips. I think we're going to see close to 40, 30% dips because there's more people in it, and so therefore more people to buy the dip. So I think you're going to see less volatility moving forwards as we go forwards, but I still think there's going to be massive volatility in this. And again, it's in Canadian dollars, it's 7,700 now. What is it in US dollars? Let's look. 61. I mean, I wouldn't be surprised if it's under 40 in the next 6 months at one point, but I also wouldn't be surprised if it goes up to 120. So it's all over the place. So don't try and time this. If you're a believer in the thesis and you think it's going to be, 5 to 10x from here, which I do, put some money again. Again, I wouldn't recommend more than 1 to 5%. That's how I sized my portfolio. I originally put 2%. Obviously, that's grown. But again, don't take any more risks than you're willing to lose. So again, this is not advice. This is just my opinion, but hopefully this was helpful and you learned a little bit more about Bitcoin and how I see the market and maybe the use cases for Bitcoin. If you found this interesting, let me know in the comment section below. Do you own Bitcoin? What are your thoughts? Yeah. And let me know if you want me to review any other cryptocurrencies to discuss them. Again, I have a couple others in my holdings, so you know what? Maybe I'll discuss those. Anyway, thanks so very much for watching, and talk to you next time. Cheers.